If you look at stocks that would be moving, for example, on a Besant headline like the one we got, let's see an intraday of Tesla, which I think is at the highs of the day, because it's got all sorts of issues. The tariffs are certainly one of them. And the company reports earnings today after the bell. Stock's up 6%. I think it's just a good place to look to see an immediate reaction for an individual name that I can't remember, to be honest, guys, another company or stock with this much noise around it. You like this one: tariffs, brand damage, Doge, sales declines, price declines, gross margins. All of the things that have been talked about are going to come to a head tonight. Nobody owns this stock. I'm kind of surprised that maybe you wouldn't take a look at this in any sense.
Let me just say this. Is it because of my political leanings, or why do you say that?
No, I don't know. I just have a feeling like you've maybe kicked the tires, pardon the pun, on something like this, and it's down it's down 50%, down 40% year to date.
I don't even know what PE it's trading at right now, but it's still expensive, and we color within the lines, and everything else we own is properly valued in the Mag 7, which is a lot of it, but we're underweight the Mag 7 relative to the to its constituent. Relative to the S&P, we're underweight the Mag 7,
Josh,
and we're underweight because of Tesla.
Josh, you remember, a stock, a company that has this much hair on it going into an earnings report like this one, with a market cap the size of this one, at least what it was? Still is large, but not as large as it was.
So historically, I have missed out on a huge run in Tesla because I never believed in it. I'm not in the cult, and I was wrong. What I would tell you now, this is a company where we're being told, the shareholder base is being told, ignore the fundamentals of the business and focus on robots. Like, they're like flat out, don't worry about how many car deliveries last month. That's not relevant to the story. 90% of Tesla's revenue comes from auto. And we're being told the cyber taxi is going to be such a monumental growth driver and completely transform the transportation grid of the United States and elsewhere, that is the reason to bet on the stock in the intermediate term. And then in the long term, everyone's going to have a Tesla robot in their place of work or in their home or both, and that's the reason to buy the stock. And those things might actually be true. I mean, the CEO is one of the most innovative human beings who's ever lived, but that's not the type of investment that I typically make. So, like, if I'm being told, oh, yeah, 90% of the business is cars, but don't worry about that, that's not what's exciting. Be excited for autonomous taxi, be excited for robots. All right, I guess, but probably not with a stock that's 50% off its high and falling. So it's not for me, but there might be an opportunity here if people get too negative, or if the auto sales picture from Europe and Asia is not as dire as the street thinks it is. The stock could probably bounce 20, 30 points. I wouldn't tell you it can't.
Throw up Apple, too, guys, if you wouldn't mind, intraday, too. I feel like that looks to me like it highs of the day also. Just because of the China relevance that it has in all of this, and maybe just the optimism that's trying to be reflected in names like that. Back at $200. And a really interesting report today from Eric Woodring. He's the top analyst over at Morgan Stanley who covers that stock. Has some positive survey data out today about upgrade cycle, which surprised many people. He reiterates his overweight today because of that. $220 is the price target. Then you have the Wall Street Journal today talking about Buffett and timing his Apple sales just perfectly. Arguably, they say one of the most lucrative single stock investments of all time. They made a paper gain of $110 billion when they began selling it. I'll just give you a quick comment on that because you own Apple and you own Berkshire, right?
Yeah. Well, and I just remember, Scott, as you do, I was very small in Apple until about 2 weeks ago when the deluge happened, and then I picked up a meaningful amount of it. And what you didn't add to that list is the sentiment around this stock, which is to say retail investors love this stock. And I, Josh, Stephanie, Rob probably see this as well, that when you go and you trim Apple from a client's portfolio because you think it's too big, almost invariably you get a call from the client saying, why did you do that? don't ever do that again. And this may sound like something ephemeral, but it actually matters. There is a strong amount of sentiment. It may not be as big as, say, Tesla, and Josh was just discussing that a minute ago, but it is vibrant. And if you add to that some fundamental drivers like you were just talking about, Scott, I think it's easy for the stock to go 10, 15, 20% higher from here.